What's up, everybody? This is your girl Erica from the CLASSYIT blog. This is my response, and you should watch these videos in order. I'll make sure to put the little button here. The first video, watch my last video, how to live like a millionaire on 20K, or how influencers live like a boss on 2K a month. Go watch that previous video before you watch this video, so that you ain't lost in what we're talking about here. All right, so watch them in order. All right, so everything bubble. If you've seen it everywhere, the marketing, stocks took a tumble, crypto took a tumble. The people in real estate like, well, we didn't take a tumble, right? There's a lot of people in the market going, everything's a bubble, right? And here's what I want you to understand. I want you to think like hedge funds, right? And there's a couple good books that I've talked about, listed in the description for you to pick up, right, on alternative financing. Again, you can also grab the Smartphone Millionaire book on investing in people, businesses, and real estate from the palm of the hand. Here's the best thing for you guys right here. Number one is your job, baby. You usually see that diagram I have from Cash Flow Management off Robert Kiyosaki. But number one is the job. And this is why I'm so telling you, hey, you must get the highest paid job you can. Now, many people argue, well, people don't work jobs for money and this and that and stress. And you can give me all these excuses, but, I've consulted with people who are making $195,000 a year at certain jobs, and they can quit in 3 years and go do something else because the level of income, right? And again, people try to argue this that make $35K a year saying they're doing okay. And it's like, you guys don't know what real concept of money in America is. You just don't. Okay. So let's try this again. Job. Number one, job. Number two is business. Now, everybody doesn't want to have a business. Everybody doesn't want to own a business. But let me just show you everything from number 3 to number 16. If you're doing all this side investing, it's literally having a side business. Okay. That's literally what it is. All right, so let's just go there. But if number 2 is, for me, it's digital real estate, it's YouTube, it's the blogs, it's the videos you see, over 2,200 videos you see, lots of affiliate marketing, which all that can combine to keep this simple like this. I just had to label it just business, right? So out of that business, in the order of how hedge funds think, is they spread out their investments. So let's say we're calling you the hedge fund of you, right? So you got 1% going into bank CDs. Why? It's only 1%, but it's quick access and you can cash those bad boys out. That's really the thinking and the reasoning, right? Number 4 is dividend stocks around 3%. Now, why would you get something so low returns? These are going to be your Johnson & Johnson, your big name, AT&T, Verizon. These are going to be your, blue chip stocks. These are going to be your classic names you've seen for years, paying low dividends because their company don't really run like that. Their company's focus is creating revenue. And so if you go watch one of the other videos I have on the other channel, you'll kind of see some of the stuff I have in the portfolio. I do a screenshot just to kind of show you why I chose those stocks and why does it matter, right? Number 5 is dividend stocks around 7%. Again, if you watch that video off the other channel, we talk about Hess, we talk about ExxonMobil, we talk about energy related stocks that are paying that percentage because they are making a killing right now and they'll make a killing in the future. Number 6 is dividend stocks around 10%. Now, this is where I show a screenshot of, if you can, Peter, dividend.com. Great website, show you high yielding dividend stocks that pay well. The goal of all these is to get paid monthly, but a lot of them pay quarterly. So you have to work it out for yourself. Number 7 is Prosper, which is peer-to-peer lending, and you can insert other peer-to-peer lending options here, but for me, it's Prosper, 10 to 15%. A lot of people, what if somebody defaults on their loan? It's $25. You're losing via inflation $25 every day, right? Every day. People use Prosper and they use Lending Club for years because it's a big bump you to the banks and it's actually moving money around the economy outside the banking, right? Number 8 is Yield Street, 10 to 15% returns. Same thing with Fundrise, same thing with Ground Floor. Why do you spread it around? Just so you're not too heavy into one platform. And also different platforms offer different opportunities. Now, if you've watched my other videos on Fundrise, on some of these online platforms, and Patch of Land, right? On one hand, you can literally be a borrower with a real estate property, put the deed up there and say, hey, this is what I'm going to build, this is what I'm going to do, and get loans in a relatively short time, 7 to 14 days, really. And so being on both sides of this, I'm like, oh, okay, I've seen what this looks like now, right? And so a lot of times, a lot of real estate investors work through here, a lot of small business owners, and it's just a great opportunity. So you get 10 to 15% returns on your money. Number 11, and also you get that entry level point of like $500 or $1,000, some higher, some lower, right? So number 11, tax lien certificates. Listen, we talk about tax lien certificates for years now. We've been investing in tax lien certificates for 7 years now. It's a great way to get 12 to 18%. And this is around averages on your money. Okay. Florida, over the counter ones. You know, we have students in Georgia who've bought $2,500, you know, tax liens and vacant lots and turn around and sell them for 30,000, right? Why? Because people are looking for cheap land to build single family housing, even if they build affordable housing or Section 8 housing or Airbnb housing, they're looking to build it. So tax lien certificates, great way for you to, one, build your portfolio, or two, just have a list of notes, right? When people talk about note investing, this is technically what they're talking about. Not everybody's going to be able to, and if you can go back, watch some of my old videos on note investing, I show you different platforms where you can actually purchase the notes from there. I put it inside the courses as well. A lot of people just literally do that all year long, have thousands of dollars in notes, just, you know, waiting for some to be paid. The difference between Fundrise, Ground Floor, Prosper, Stock Dividends is you're looking for monthly. From number 4 to number 10, you're looking for monthly to quarterly returns. Tax liens are something, depending on if it's already a vacant property, you can seize immediately, and depending on the state, these are things that they're going to be a long-term kind of 6 months, a year, 3 years returns, which is fine if you're really understanding the point of, how do hedge funds think? They don't just think for tomorrow and next month, they think for years to come, right? Number 12 is real estate rentals. As you go down the list, more money is required. Did you notice that? So as you go down the list, number 12, real estate rentals. So again, as a person who is acquiring land right now and acquiring, like right now, recently, I went to go look at a lot for a mobile home park and actually put a mobile home on it, right? That's you're just, when you do the math on getting the lot, putting the mobile home on it, you do the math, you're talking about 20% returns. Whether I put you on roof stock and you spend 60K for a house and you put 15%, 15 grand down, 9 times out of 10, once you do the math for the whole year, the rental returns from the tenant, even after the property manager, still comes out to about 20% returns on average. This is why so many companies like BlackRock and Stone this and Stone that are dumping billions of dollars into real estate and turning them into rentals, because they know people want to be in houses. People do not want to be in apartments. As much as people try to sell you this apartment dream, most people that want to be in apartments are people that move from the north to the south. So they're not really invested in the community to have a house. Now, if they do want a house, they go rent one, but most times they're just popping into community. They don't know where exactly to live yet. So they rent an apartment. This is very common, right? Or people who are renting apartments in between before they go get a house. It's very common. So number 13, high returns, this is quotation marks, real estate, beach rentals, and vacation rentals. So again, as you go down the list, more money, different things like that. So for example, the beach rental I'm looking at, that's 700,000 and one that's $1 million. Even if you get you know, a commercial, which you really wouldn't get a commercial loan, but let's say you get a loan with your LLC, a lot of times those capital companies are going to make you put 25% to 30% down, right? This is why it's good to have good credit and work with certain companies, but different capital firms will go, hey, put 30% down, right? So out of that 700,000, I put 30% down. That's a huge number. But on the difference is vacation rentals in that part of North Carolina where I did the video for you guys, you're talking about 5 to 6K a week on the vacation rental. So yes, the property management company is sending the cleaners, scheduling everything, getting everything taken care of, holding the deposits till they get there. But overall, you're talking about a property that's going to make $250,000 a year gross. Now net is closer to 105,000 to 120,000. This is why people, if they get a big ball of money or a big opportunity, they'll invest in vacation rentals, because it's they call it lifestyle, luxury lifestyle living, one, and two, they can, you know, a week or two, you know, use the vacation rental themselves or their families. But ultimately, it's a great way to get a 6-figure bag, right? But again, number 13 is for people who have high you know, either super high income, super high savings, or they've got money saved up, or they use money, they take a loan out from their insurance. You know, there's various reasons why you would have this amount of money or would invest this amount of money. Okay. So number 14 is apartment investing. Now, why did I put this here? This is just some of the groups I'm seeing. Now, you're going to say 11%. Hold on, take a deep breath. Let me explain. A lot of times when you get into certain lending positions, preferred lending, guaranteed lending, limited liability partner, GP is the ultimate partner. A lot of the number I'm seeing is 75,000. Now, why do I say it 11%? The 75,000 you're putting into the apartment. Put a picture of an apartment here, Peter. In the group, now they're going to make monthly payments to you, but the monthly payments are going to be around 11%. And in 3 years, you're going to get back the principal of this amount right here. So you're getting 11% returns. You'll probably get what, out of 75,000, maybe $700 a month, right? And so some people go, well, I don't just buy a house. Well, because in apartment investment, there's other different ways that they kind of increase the value, refinance, and give you your whole lump sum back again. There's various reasons why people do it this way. Just higher position, higher returns. That's all. I've seen some people put in 100K, and 100K gets them 20% returns on their money. You know, so there's different reasons. I can't break it all down here, but I'm doing this video as the everything bubble. If someone were to have their money spread across multiple of these fronts, even if one or two things take a hit, they're still going to be okay. Now, number 15 is land. Why did I put a question mark there? Land is infinite. You can go left or right. You can keep it as a farm. You could lease it. You know, we call it sharecropping in the South, but I mean, the new young people call it, I'm homesteading. I'm renting a homestead. I'm leasing a homestead kind of thing. And so you have unlimited opportunity with land, right? We can literally buy land and build housing on it, right? We can buy land and just store it and store honeybees, or convert it to a farm, or convert it to a trailer park, honestly, or an RV park, or, you know, just there's a lot of flexibility here, which is why land gets the question mark, because it could be infinite returns, right? Infinite, honestly. All right, down at the bottom, gold, silver, and pew, pew, pew. So these are also some things that have just infinite returns. You can hold them for value, gold or silver, and years down the road, still have them to sell and make money. Pew, 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 you know what that means on this channel. I try to stay within the guidelines of YouTube or whatever, but so you look back a couple of years ago, right when Biden got in the office, you couldn't buy ammo anywhere. There was no ammo available. There were no firearms available, right, for about 90 days. So everybody was out trying to run around and buy them, and there were none for sale. So who was making money? People who had them for sale and could sell them at the highest bidder. So something I bought months ago for, you know, $500, I could turn around online and sell it for $600, $800, $900. I was like, this is crazy. And so what you have to realize is that is the power of hard assets, hard metals, if that's the word we want to use. So hard metals. So anyways, you guys, this is how do you combat everything bubble? It's by having your money diversified, right? And how do we build these pathways? It starts with having the job that you can take 10% of every check and start spreading this around, right? Everybody's not gonna be able to do all these things at one time. And so, and it makes no sense to try to jump all the way to number 14 or 13 unless you have really high reserves. So most people are going to start with putting 500 in Fundrise and spreading out, you know, $100 a week, right? In a Prosper, well, you can put $25 down on 4 different loans. So by the time you look up and you do that every week, 4 notes a week times 52 weeks. Now you're at like what, 2,000 notes or 200 notes or something to that effect. Let me make sure with my calculator. If you buy 4 notes a week, let me double check here. 4 notes a week times 52 weeks. Yeah, 208 notes. So it's really one of those things that you can do. So anyway, that's just something I want you guys to think on, focus on. And I hope this made sense. I hope this was able to get you thinking through what the everything bubble really means, right? People aren't diversified, right? They just really heavily pour into one thing, or they poured all their money in stocks. And a lot of people don't understand that the table of retirement is not just a job and a pension. Even then it was shaky, right? It was like job, pension, and Social Security. Even then it was shaky. That's a three-legged stool, but really you need a plethora of things that if something goes wrong, if you do this for 3 years, just completely reinvesting in this list, you can pull from all these items. And so if you go back and watch the video about living on $20K a month, you'll understand why so many people can, once they get in that house, they don't care, right? Everything else is just gravy on top. Or once an influencer lives overseas, they can just slowly live on so much less. So hope this was helpful. Guys, have a great day.